Okay, now in employment income, basically it means that let's say you're working in an organization. Okay, so obviously you will receive some salary, right, against your services. Plus, apart from salary, you will also receive some types of benefits. Okay, so all of that is collectively known as your employment income. Okay, so in employment income, you will be receiving your salary, right? So according to HMRC, salary is 100% taxable. Okay, but according to the relevant tax year. Okay, so you have to prorate the amount of salary according to the relevant tax year. Okay, now we know that our tax year that starts from 6th of April 19 and it will end on 5th of April 20. Okay, so you have to perform your calculation according to the tax year. Okay, so that was about salary. Now, if I talk about benefits, so benefit means that maybe you might be receiving some car, right? You might be receiving some fuel, or you might be receiving some medical insurance, foreign trips, etc. Right? But in benefits, they have categorized the benefits into two categories. Okay, one is exempt benefit, and the second one is taxable benefit. Okay, now taxable benefit means that those benefits will be added to your income and you have to pay tax on it. Okay, like you will take your salary. Okay, now in the amount of salary, you will add those benefits. Like if there is any car benefit, fuel benefit, so that will be added in the amount of salary and you have to pay tax on it. Okay, but if I talk about exempt benefits, so exempt benefit means that you don't have to do anything. You will just leave them as it is. Okay, exempt benefit means those benefits on which you don't have to pay any tax. Okay, you will not pay any tax on those benefits. Okay, now I will give you a list of exempt benefits. You just have to learn them. Okay, but remember one thing, that the word exempt means that we will not apply any tax on it. Okay. So it means in this whole topic, we will be dealing with taxable benefits. Okay, although we have covered few of the benefits before, like we have covered share options, we have covered termination payments, okay, and we have even covered pension. Okay, so all the core areas are already covered. Okay, now we have to deal with small areas today. Okay, all the areas which are relating to your F6 paper, so that we will deal today. Okay. Okay, now look over here. So if you have to calculate your employment income, so you will be taking your salary. Okay, and if there is any bonus, you will add your bonus as well. Now we have some special rule for bonus, so that we will see today. Okay. Then you will be adding your benefits. You will be adding all your taxable benefits over here, like your car benefit, fuel benefit, all of those will be added. Now from this, you will be deducting allowable deduction, which we have seen in our last class, right? So I give you an example of few allowable deductions. Like if you're paying some subscription fees, okay, so that is an allowed expense. You can minus that from your income. Okay. So this will be your employment income. And we know that on employment income, we have to apply non-saving tax rates, right? Okay. Now let us first see that how many taxable benefits we have. Okay, so let's see first. Okay, this is the list of taxable benefits which we have to cover. So as you can see, we have accommodation benefit, that is from your F6 paper, car benefit, fuel benefit, when benefit, all of these are from your F6 paper. Okay. So there is no change in those rules. Then authorized mileage allowance. Okay, then salary, bonus, loan benefit, use benefit, purchase benefit, share option scheme, that is already covered, right? We have already covered this area. So that was one of the core area and it is examined a lot. Okay. Then we have even looked at the termination payment in our last class, right? So again, that is a very important area. Then NIC, that is also covered. Child care benefit, that we will see. Okay, then we have pension. So pension is also covered. Okay, in fact, we have also covered childcare benefit, if you remember. Okay, we have covered these areas. So the last 5 topics are already covered. Okay, so today we have to cover this list of accommodation benefit. Now, first of all, let us discuss authorized mileage allowance. Okay. So you guys can come on page number 7 of your employment income notes. Okay, page 7. Okay, ready? Okay, now, firstly, let me tell you when you will be using this concept. Okay, how you will identify this concept in your exam question. Okay, so whenever you see that employee is using his own car for business journeys, so it means you have to apply the concept of authorized mileage allowance. Okay, so if in the question you see that the employee is using his personal car for business journeys, so it means you have to apply the concept of authorized mileage allowance. Okay, now listen very carefully. Now, according to HMRC, if employee is using his own car for business journeys, then he is saying that employer, he should give some amount to the employee. Okay, you are using your own car for business purpose, right? So according to HMRC, they are saying that it is an ethical behavior that the employer should pay some amount to the employee, right? But again, HMRC is not putting any restriction on the employer. Okay, he is just saying that it is an ethical behavior that since he is using his own car for business journey, so you should reimburse him with some amount, right? You should provide him with some amount. Okay. Now, if the employer pays that amount on the terms and conditions of HMRC, okay, if the employer pays amount on the terms and condition of HMRC, then employee will not have to pay any tax on it. Okay, they have set their own terms and condition for authorized mileage allowance. So they are saying that if you follow those rules and if you follow the terms and conditions, then the employee will not pay any tax on that amount. Okay, so now let's see what are the criteria. What is the criteria which is set by HMRC? Okay, but again, I'm repeating again, it is not necessary that employer will give you will reimburse the amount to you. That is up to them. So the tax authorities, they cannot put any restriction on the employer. Okay, that is totally their decision. If they want, they can reimburse some amount to you. Otherwise, they won't be paying you any amount. So that is totally the decision of employer. Okay. Okay, now for car, they're saying that in case of car, they're saying that on first 10,000 miles, you should pay them 45 pence per mile. Okay, and on above 10,000 miles, they're saying that you should pay them 25 pence per mile. Okay, so if they have drove 10,000 miles, so the tax authority says that you should pay them 45 pence per mile. Okay, but let's say if they have they were driving more than 10,000 miles. Let's say they have driven 12,000 miles. So till 10,000 you will pay them 45 pence, and on the above mile, on the excess miles, which will be 2,000 in my example, you have to pay them 25 pence per mile. Okay, so if the employer pays him according to this criteria, okay, according to this criteria, then the employee will not be required to pay any tax on it. Okay, so if he is paying according to this benchmark, then employee is not required to pay any tax on that benefit, on that amount. Okay, he will receive some amount, right, against the fuel. So if the employer pays you according to this benchmark, then employee is not required to pay any tax on it. Okay, now listen very carefully. Okay, now if the employer pays more than this, okay, if he is paying you more than 45 pence, okay, on first 10,000 miles, if he is paying you more than 45 pence, then according to the rules, the excess amount will be considered as a taxable benefit. Okay, only the excess amount. Like if he is paying you 60 pence, okay, on the first 10,000 miles, let's say he is paying you 60 pence. So now you don't have to pay tax on this whole 60 pence. No, the rule says that you will pay tax, the excess amount, you have to pay tax on the excess amount. Okay, so the excess amount will be 15 pence, right? Okay, so 15 pence multiplied by the number of miles. Okay, like let's say if you have driven 9,000 miles, so into 9,000, so that will give you with an amount, right? So now this amount will be considered as a taxable benefit, and you have to pay tax on it. Okay, so over here again we are the employee. Okay, we are studying from the perspective of employee. Okay, so if the employer pays you more than HMRC restriction, then the excess amount will be considered as taxable benefit. And taxable benefit means that you will add that benefit to your income and you have to pay tax on it. Okay, so that is case one, that he is paying you more than the HMRC restriction. Now case number two. Now employer is paying lower than HMRC restriction. Okay, he is paying lower than this. Okay, because that is up to the employer, right? How much he wants to pay. That is totally up to him. So if he want, he can even pay you lower than this. Okay, so if he pays you lower than HMRC restriction, then the difference will be considered as a deductible expense. Okay, the difference, only the difference will be considered as a deductible expense. Like let's say you have driven 8,000 miles. Okay, so according to the rules, on the first 10,000 miles, you should have paid him 45 pence, right? But let's say the employer is not paying you 45 pence. Instead, he is paying you 30 pence. Okay, he is paying you how much? 30 pence. Okay, so now only the difference will be considered as a deductible expense. So the difference will be of 15 pence, right? So into 15. So whatever amount you will get, that will be deducted from your income. Deductible expense means you have to minus that from your income. Okay. Okay, so in this situation altogether, there can be four cases. Okay, case one, that maybe he might pay you according to HMRC restriction. Like on the first 10,000 miles, he is paying you 45 pence. And on the excess mile, he is paying you 25 pence. So if that is the case, then you don't have to pay any tax on it. Okay. Then case number two, he is paying you more than HMRC restriction. So now in this case, the excess amount will be considered as taxable benefit. Okay, only the excess amount. And what was case number 3? That he is paying you less than HMRC restriction. So in this case, the difference will be considered as deductible expense. So that you will minus from your income. And what is case 4? That he pays nothing. That is also possible, right? Because right at the start, I told you that HMRC, they cannot put any restriction on the employer. That is totally his decision, right? So he will decide whether he wants to make some payment or not. Okay. Yes, we are talking about the employee. Okay, so it will be deductible expense for the employee. Okay. Okay, now this was for car. Okay, this restriction applies on car. Yeah, the fourth one is that he does not pay at all. Okay, we will look at the calculation. Okay, just wait for 2 minutes. I will make you guys cover all the 4 cases with the help of a calculation. Okay, so just wait for 2 minutes. Okay, now look over here. So previously he was using his own car for business journey. Now let's say he is using his motorcycle for business journey. So according to the rules, the employer, he should pay you 45 pence per mile. So this is flat 45 pence. So over here we don't have any slab. Okay. Then cycle, it is also possible that maybe he is using his cycle for business journey. Okay, for business related work. So now how much payment should be made? That is 20 pence for all miles. Okay, that is flat 20 pence for all miles. Okay, and calculation is same. Okay, we will look at the calculation for car. Okay, now that calculation will be same for each one of them. Okay. Okay, now what is the last one? Public transport. Okay, so if you are using public transport for business related work, so in that situation, HMRC says that the employer should pay you 5 pence per mile. Okay, 5 pence per mile. Again, this is flat 5 pence for all the miles. Okay. Okay, now read in the bracket. Now this is important. It says if higher amount is paid by employer, then it will be taxable. If lower is paid, then it is not deductible. Okay, so in case of public transport, if the employer pays you more than 5 pence, okay, then the excess amount will be considered as your taxable benefit. Okay, but in case if he pays you less than 5 pence, so remember one thing, that in public transport, there will not be any allowable deduction. Okay, then the difference will not be considered as allowable deduction. Okay, so in all the three, that is car, motorcycle and cycle, the rules are same. Okay, if he is paying you more than the HMRC restriction, then excess is considered as taxable benefit. And if he pays you less than HMRC restriction, then the difference is considered as deductible expense. But the rule is a slightly different for public transport. Okay, so if you pay him more than 5 pence, then the excess will be considered as your taxable benefit. But if the employer pays you less than 5 pence, then it will not be considered as a deductible expense. Okay, now difference will not be considered as deductible expense. Okay, clear? Okay, now there is one point on NIC. It says class 1 NIC will only be calculated if amount paid by the employer exceeds 45 pence and will be calculated on excess amount over 45 pence. So if you remember when we were discussing the area of NIC, so I told you this point in NIC topic. Now NIC is paid on gross earnings, right? I'm talking about class 1 NIC. Okay, so class 1 NIC is paid on gross earnings. So remember what is included in gross earnings. Yes, gross earnings, that will include your salary, bonus, authorized mileage allowance, and other cash taxable benefits. But for authorized mileage allowance, I told you that you will take the amount which is above 45 pence. Okay, you will take the amount which is above 45 pence, and only on that amount you have to pay your NIC. Like let's say if he is paying you, if the employer pays you 60 pence, okay, so you don't have to pay NIC on the entire 60 pence. No, from this 60 pence you will minus 45 pence, and on the excess 15 pence only you have to pay the NIC. Okay, so only on the excess 15 pence you will pay your NIC. Okay, because it says that you have to pay NIC on authorized mileage allowance if it exceeds 45 pence. Okay, you have to pay only on the amount, excess amount over 45 pence. So is it clear? Employer, employer does not pay NIC on authorized mileage allowance. Okay, they pay NIC on trading profits. Okay, they pay class 2 and class 4 NIC. Okay, so that we will see in when we will be dealing with trading profit. Okay, trading income. So that we will see over there. Okay, now let's look at a question. Come on, question number 7.
Hello.
So it says Mr. A drove 30,000 miles, right? Okay. Now in case 1, it says that he received 60 pence per mile. Then in case 2, it says he received 20 pence per mile. And case 3, he received nothing. Okay. So you have to deal with each case separately. So let's deal with case 1 first. Okay. So employee received 60 pence, right? Okay, so 30,000. He drove 30,000 miles, right? And on 1 mile, he is receiving 60 pence. So into 0.6. So this is going to be 18,000. Okay, so this is what he has received from the employer. Now let's see what does HMRC say. Okay, let's see. Minus HMRC restriction. Okay, now according to HMRC, okay, on the first 10,000 miles, you should have paid him 45 pence, right? This is what HMRC says, right? So now we are saying that what is how much amount should be paid according to HMRC on those 10,000 miles, on those 30,000 miles. Okay, so according to HMRC, they are saying that on the first 10,000 miles, you should pay him 45 pence. So 10,000 into 0.45, right? So that is going to be 4,500. Then they are saying that on the miles above 10,000, which is 20,000 over here, right? On the excess miles, you should pay him 25 pence per mile. So into 0.25, that will be 5,000. Okay, now listen very carefully. See, the employee have received how much? 18,000, right? But according to HMRC, you should have paid him 5,000 plus 4,500. That will be 9,500, right? So according to tax authorities, you should have paid him 9,500. But you have paid him more than HMRC restriction, right? You have paid him 18,000. Okay, the tax authority says that over here, in this case, you should have paid him 9,500 pound. But the employer have paid you more than HMRC restriction, right? He has paid you 18,000. So now in this case, if the employer pays you more than HMRC restriction, then the difference will be considered as taxable benefit, right? So the difference will be of 8,500, right? So this 8,500, this will be considered as taxable benefit. Taxable benefit means that it will be added to your income and you have to pay tax on it. Okay, clear? Okay, so this is your format. You will take employee receipt, then from there you have to minus HMRC restriction. So that was case 1. Now let's look at case 2. So in case 2, employee received in case 2 he received 20 pence per mile, right? And we know that he drove 30,000 miles, right? So 30,000 multiplied by 0.2. So that is going to be 6,000, right? Okay, so this is what he has received. Now let's compare this with HMRC restriction. So that will still remain the same, right? Which we have calculated above. So now let's see what HMRC says, that how much should you pay on 30,000 miles. So they're saying that on the first 10,000 miles, you should pay him 45 pence. That will be 4,500. And on the excess miles, which are 20,000, right? They're saying on the excess miles, you should pay him 25 pence. That is 5,000. So as you can see over here, this time the employer have paid you less than HMRC restriction, right? So HMRC is saying that you should have paid him 9,500 pound. But employer have paid you less than this, right? Employer have paid you how much? They have paid you 6,000. Okay, instead of 9,500. So the employer pays you less than HMRC restriction, then the difference will be considered as a deductible expense. So over here, only the difference will be considered as a deductible expense. So difference that is going to be of 3,500, right? So only the difference will be considered as deductible expense. So now what you have to do is you will minus this expense of 3,500 from your income. Okay, so if you see it from employees if you see it from employees perspective, so you will find that this is a benefit for employee, because if you minus this expense from your income, so your income will decrease, right? And therefore your tax will also decrease. Okay, clear? Now what is case number 3? That he received nothing, right? So for case 3, we will say that employee received nothing, right? 0. Okay, and but according to HMRC, what was HMRC restriction? They have told you that on the first 10,000 miles, you should have paid him 45 pence, that is 4,500, and they're saying that on the excess miles, which will be 20,000 in this question, you should have paid him 25 pence. So that is going to be 5,000. So this time the employer have paid you nothing, right? And what was HMRC saying? That HMRC was saying that you should have paid him 9,500 pound, but you have paid nothing to him. So now the entire benefit will be considered as a deductible expense. Okay. So the entire 9,500, this will be considered as a deductible expense, right? So that you can minus from your income. Clear? Okay, so I have covered all the cases with you guys. Okay, and what was the fourth case? That employer pays you according to HMRC restriction. So if he is paying you according to HMRC restriction, then you don't have to pay any tax on it, right? Yeah, because over here it will be equal, right? Even if you put that case, like if you take it as a case 4. So don't you think that both HMRC restriction amount and the amount which is received by employee both will be equal? Okay, so that is going to be 0 then. Okay, so that means you don't have to pay any tax on it. Okay, so you will not apply this concept on the following 2 journeys. Number 1, private journeys, and number 2, journey between home to permanent workplace and permanent workplace to home. Now, right at the start of this topic, I told you that you will only apply the concept of authorized mileage allowance when employee is using his own car for business journeys, right? He is using his own car for business journeys. So it means if you are using the car for your private journey, then on private journey miles, you will not receive any allowance. Okay, on private journey miles you will not receive any allowance. Okay, those miles will not come in authorized mileage allowance. Okay, then what is point 2? Okay, now point 2 again, that is a private use. Okay, where you are going from home to permanent workplace and permanent workplace back to home. Okay, so you are paid salary for that. Okay, you are paid salary for that, because in that salary you will see that if you look at the breakup of salary, so there will be a traveling allowance for that. Okay, so you're already paid for the journeys between home to workplace and workplace to home. So for that you're already paid with a salary. Okay, clear? Okay, so don't get confused in exam. Okay, so please remember one thing, that on private journey you will not receive any authorized mileage allowance. That is only for business journeys. Okay. Okay, now remember one thing, that bonus is considered as a one-time payment. Okay, that it is considered as a one-time payment. And secondly, it is taxable on earning basis, cash basis. Okay. So I have told you 2 points. Number 1, bonus is considered as a one-time payment. And what was the second point? That it will be taxable on earning basis. Okay, now the question is, what do I mean by one-time payment? Okay, now according to taxation, if a payment is received as a single payment, if you're receiving a single payment, Okay, but you're not receiving any monthly, you're not receiving that amount on a monthly basis, but instead you are receiving a single payment, one time payment. Okay, so it will not be prorated over number of months. Okay, you don't have to prorate over a number of months. So either the whole amount will be completely taxable or it will be completely exempt. Okay, so in taxation, whenever you see the word one time payment, so what does that means? That either the whole amount will be completely taxable or the whole amount will be completely exempt, but it will not be prorated. Okay. Okay, then secondly, I have told you that it will be taxable on earning basis, cash basis. Okay. Now, firstly, we will look at the rules, but first of all, let us understand one simple concept. Okay. Now, in bonus, um, if I talk about bonus earned and bonus received. Okay, now the time period for both of them can be different. Like they can be the time period for bonus earned and bonus received can be different. Now, let me tell you how. See, bonus will be earned upon the achievement of target, right? If you have achieved the target, then you will earn the bonus. Like, let's say you were given with a target and you were told by the employer that as soon as this particular target is achieved, you will earn the bonus. Okay. So on the date of achievement of target, bonus will be earned. Okay, so on the day when you will achieve the target, you will earn the bonus. But it is not necessary that on the same day you will also receive the bonus. Okay, maybe they might pay you the bonus after 1 month or 2 months, although I have earned it, right? So as soon as I will achieve my target, I will earn the bonus. But it's not necessary that on the same day you will also receive the bonus. Okay, maybe they might pay you after 1 month, 2 months, 3 months. Okay, so both the dates can be different, right? Okay, so now let's see. Now over here, basically the rules are different for employee and for the director. So first of all, let us look at the rule for employee. Okay, so for employee, it says bonus is treated as received on earlier of point 1 and point 2. So let's see what is point 1 and point 2. So point 1 says date of payment and point 2 says date of entitlement. Okay, so for employee, they are saying that bonus will be taxable on earlier of number one, date of payment, and number two, date of entitlement. So whichever event takes place first, like let's say if you were entitled to a bonus on 5th of May 20. Okay, you were entitled to bonus on 5th of May 20. But let's say on the same day you have not received the bonus. You are receiving bonus in June. Okay, on 30th of June 20, you are receiving the bonus. So what does the rule says that when this bonus will be taxable? It says whichever event takes place earlier. So that means date of entitlement that took place earlier, right? That is on 5th of May. Although I have not received the bonus, right? But since I have earned it, so on that same day, you have to pay the tax on it. Okay, and it will not be prorated, right? Bonus will not be prorated. Clear? So that is the rule for employee. Now let's look at the rule for directors. So for directors, it says bonus is treated as received on earlier of point 1, 2, 3, 4, and 5. So for bonus, they are saying that you have to look at all the 5 events. So whichever takes place early, whichever events is taking place early, so on that date, your bonus will be taxable. Now, what are those 5 events? Let's see. Number one is date of payment. Then second one is date of entitlement. And what is the third one? Date when amount is credited in accounts. Okay, now look at date event 4. Date when period of account ends if amount has been determined. Now let's take an example. Let's say your year end is your year end is 31st of December 16. Okay. Now on this year end we have decided the amount of bonus. Okay. On the year end you have decided the amount of bonus, and the director, he knew about it. Okay, he was also aware about it. So on this date company have decided about the bonus, and even the director, he is also aware about this. Okay, so date when period of account ends, so your year that ends on 31st December 16, right, if amount has been determined. Now what is the last one? Date when amount is determined if after the end of period of account. Okay, now again let's say my year end is 31st of December 16, but at year end bonus was not decided. Okay, at year end bonus was not decided. Now let's say bonus was decided after the year end. After the year end, let's say on 31st of May 17, bonus was decided. So that is after year end, right? Okay, so that is the last point. The bonus is decided after year end. Okay, so whichever event is taking place early, so on that date bonus will be taxable. Okay, so we know for employee what was the two things, that is date of payment and date of entitlement. Whichever is taking place first, bonus will be taxable on that date. But for directors we have 5 events. Okay, so you have to see that which of the event is taking place first. So on that date bonus will become taxable. Clear? Okay, accommodation benefit. Now see, we have two types of accommodation. One is job related and the second one is not job related. Okay. Job related means that you are provided with the accommodation for the purpose of job. Like let's take an example of security guards. Okay, if you are providing any, if an individual is providing any security services, so for that purpose, obviously they need to live in the accommodation, right? So they are living in the accommodation for the purpose of job. Otherwise, they cannot fulfill the duties, right? They cannot fulfill their responsibilities. So that is job related accommodation. Okay, where you have to live in that accommodation for the fulfillment of your responsibilities, for the fulfillment of your job. Now, what is the second one? Not job related, not job related. So over here, you don't have, it is not compulsory to live in the accommodation. Okay, like you're not living in the accommodation for the purpose of job. Okay, you're living in the accommodation for personal use. You're using the accommodation for personal use. Okay, the employer, he have provided you with an accommodation for your private use. Okay, so this is not for job, this is not job related, this is for your private use. So right now we are discussing not job related accommodation. Okay, we will cover this job related accommodation later on. Okay, so right now we are just discussing not job related accommodation. Okay, now listen very carefully. Okay, now over here there can be two cases. Okay, there can be two cases. Like let's say the employer, he took the property on rent and then he has provided that property to the employee for personal use. So in case of rent, firstly the employer, he took the property on rent and then he has given that property to employee for personal use. That is case 1. Then what is case 2? That employer, he purchased a property and then he has given that property to employee for personal use. Okay, clear? So that was your case 1 and this is your case 2. Okay, now firstly let us discuss that what will happen if he takes the property on rent and then give that property to employee. Okay, now in case 1, obviously you are receiving some benefit, right? Being an employee, I have been provided with an accommodation for personal use. So that is a benefit for you, right? So taxation authorities, they say that you have to pay tax on it. Now the question is, on which amount will I pay the tax? Right? On which amount will I pay the tax? So the rule says that you have to compare both two amounts. You have to compare two amounts. What is the first amount? Annual rateable value. And what is the second amount? Rent paid up by the employer. So you have to take two amounts. Annual rateable value means market value of rent. Okay, in taxation terminology, market value of rent is known as annual rateable value. Okay, so you will compare market value of rent with rent paid by the employer. Okay, so now obviously the employer is paying the rent on your behalf, right? Okay, so the rule says that you will take the higher of, because it is possible that maybe the employer is paying rent less than the market value, right? That is quite possible, right? So what does the rule says? That you will compare the rent paid by the employer with market value of rent, and the higher of will be taxable. So whichever is higher, that will be considered as a taxable benefit for the employee. So on that you will pay tax. Okay, so in the question you will be given with both annual rateable value and rent paid by the employer. Both amount will be given. You just have to compare them. You will just compare them, and in comparison you will take higher of amount, higher of. So higher of will be taxable. So that taxable means it will be added to your income. Clear? So that was your case 1, where he took the property on rent and then he has given that property to the employee. Okay, now let's look at case 2. Now what is case 2? That employer purchased a property and then he has given that property to employee. Okay, so in case of purchase, they are saying that you have to calculate two things. Okay, the first one is annual rateable value. So I have already told you that by annual rateable value we mean market value of rent. Okay, so they are saying that annual rateable value is compulsory taxable. Okay, now let me tell you one point over here. Now see, if I take the property on rent and then give that property to employee, so in that case you have to compare two things, right? That is annual rateable value and rent paid by employer, right? And I told you that higher of will be taxable. But in case if I purchased a property, then obviously there cannot be any rent paid by the employer, right? Because he has purchased a property. So now you are just left with annual rateable value. Okay, so annual rateable value will be compulsory taxable. Okay, so firstly they are saying that whatever the market value of rent is, that is your benefit. Okay, so you have to pay tax on it. Then secondly, they have asked you to compute expensive accommodation. Okay, you will be computing one more thing, that is expensive accommodation. Now this is conditional. Okay, this one is conditional, but annual rateable value is compulsory taxable. Okay, but for expensive accommodation, they are saying that this is conditional. Now, what is the condition? You will only calculate expensive accommodation when property costs more than 75,000 pounds. Okay, when will you calculate expensive accommodation? When property costs more than 75,000 pounds. So it means that if the cost of property is less than 75,000 pounds, then you don't have to compute any expensive accommodation, right? Okay, you will only compute annual rateable value. That's it. And you will pay tax on it. Okay, but if the cost of property is more than 75,000 pounds, then two things will be taxable, right? Two things will be taxable. That is number one, annual rateable value, and number two, expensive accommodation. Okay. Now the question is, how will I calculate expensive accommodation? Now, firstly, I will look at the cost of accommodation, right? So let's say the cost is more than 75,000. So it means now I have to calculate expensive accommodation, right? So how will you calculate expensive accommodation? So for that, you will take cost minus 75,000 pound into 2.5%. Okay. So remember this thing, that in case of purchase of property, annual rateable value is compulsory taxable. But for expensive accommodation, they are saying that expensive accommodation is only taxable if the cost of property is more than 75,000 pounds. And how will you calculate expensive accommodation? By using this formula. Okay, clear? No, I'm telling you when you have to take the market value over here. Okay, so just wait. Okay, now I have written few important points over here. Now, what are those important points? That is, if there is some capital expenditure on the property, then it will be added to the cost of property, but it should belong to previous year. Okay, now listen very carefully. Now it means that if any capital expenditure is incurred in the current year, that is 1920, okay, then you will not consider it. Okay, if any capital expenditure is incurred in the current year, then we will not consider it. It will be irrelevant for you. You will just ignore it. Okay, they are saying that capital expenditure will only be added to the cost if it relates to previous tax year. Okay, now there is no restriction on the previous tax year. Okay, so it means that capital expenditure, it can relate to the tax year of 1819, 1718, 1617. So on the previous year, there is no restriction. Okay, so what you have to do is, if there was any capital expenditure incurred in the previous year, so what you will do is, you will add that capital expenditure to the cost of property. So it means now your expensive accommodation formula will become, yes, your expensive accommodation formula will become cost plus capital expenditure minus 75,000 pound into 2.5%, right? Okay, but remember one thing, that this capital expenditure should relate to previous tax year. Current year capital expenditure will not be added. It will be irrelevant for you. You have to ignore it. Okay. Now, what is the second point? That if there is some business use of the property, it will reduce the benefit. Okay, now listen carefully. Now see, the employer have given the property for personal use, right? But let's say a proportion of property is used for the purpose of business. Okay, let's say a part of the property that is used for the purpose of business. Maybe let's say one room or two rooms are used for the purpose of business. Okay, so it says that now your benefit will reduce. Like let's say 20% of the property is used for the purpose of business. Okay, only 20% of the property is used for the purpose of business. So it means that you only have to pay tax on 80% of the benefit, because 80% was private use, right? Okay, so you will only pay tax on private use, private use benefit. Okay, so since 20% is used for the purpose of business, so on 20% of the property you don't have to pay any tax. You will just pay tax on 80%. Clear? Okay, now what is the third point? That if employee is contributing some amount towards the use of accommodation, then it will reduce the benefit. Okay, now let's take an example. Let's say the total rent of the property is £300 per month. Okay, the rent is £300 per month, and the employer, let's say he has asked the employee to pay £100. Okay, out of £300, employee is just paying £100. Okay, so if I don't pay any amount, so can I say that this whole 300 will be considered as my benefit? Okay, if I don't contribute anything, so this whole 300, this will be considered as my benefit, right? But in this example, I'm contributing £100 per month. So it means now my benefit will not be 300. In fact, it will be 200, right? It will be 200, right? Okay, so it means that if employee is paying any rent, so that will reduce your benefit. Okay, so now tax authorities can't ask you to pay tax on this whole 300. You will tell them that since I have contributed £100, so now my benefit has been reduced to £200. So I will only pay tax on this £200. Okay, clear? Okay, now the last point, which is in fact a very important point. So what does it say is that if 6 years have passed from purchase date of the accommodation, then we will consider market value instead of cost in expensive accommodation formula. Okay, so if 6 years have passed from the purchase date, so in that situation, in your expensive accommodation formula, you will use market value instead of cost. Okay, now from where will you count those 6 years from? From the purchase date of property. Okay, so from purchase date of the property, you will start counting your 6 years. Okay, so if there's a gap of 6 years, then what does the rule says? That in expensive accommodation formula, you have to use market value instead of cost. So it means your expensive accommodation formula will become market value minus £75,000 into 2.5%. Clear? Okay, so we have salary, right? Now salary is 120,000. Okay, But can you see that he joined the company on 1st of May 19? Now, if I talk about the tax year, our tax year will start from 6th of April 19 and that will go till 5th of April 20. So he joined the company on 1st of May 19, right? Okay, so it means you will count your months from May till 31st of March 20. Okay, 31st of March 20. So that will be how many months? 11 months, right? So it means salary will be prorated over 11 months into 11 by 12. So that is going to be 110,000. Okay. All right. So that was salary. Now, secondly, over here, he have received an accommodation for personal use, right? So it means you have to calculate accommodation benefit. Now, in accommodation benefit, we have studied two things. We have studied two cases, right? The first case was where the employer uh, took the property on rent. And what was the second case? That he purchased a property. So which case will you apply? Case 1 or case 2? Case 2, right? Because the property was purchased by employer, right? So you have to apply case 2. Now in case 2, I told you that annual rateable value is compulsory taxable, right? Annual rateable value is compulsory taxable. So annual rateable value is 22,000, right? So this will be taxable. So it means it will be added to your income. So you will add annual rateable value, right? Okay, so annual rateable value is 22,000. But this whole amount will not be taxable. The whole will not be taxable. Why? Because if you look in the question, he received the accommodation on 1st of June 19. Okay, this is an annual amount. This is for 12 months. Okay, but you have not consumed this benefit for 12 months in the current tax year, right? Okay, you have received the benefit on June 19. So you will count your months from June till 31st of March 20. So that is going to be how many months? 10 months, right? So into 10 by 12. So that is going to be 18,333. Okay. Then secondly, I told you that expensive accommodation was optional, right? It was conditional, in fact. So for expensive accommodation, I told you that you will only calculate expensive accommodation if the cost of property is more than 75,000 pounds. So the cost is more than 75, right? Okay. So it means you have to calculate expensive accommodation as well. So for expensive accommodation, we have a formula. Now, what was the formula? Cost minus 75,000 into 2.5%. But the question is, should I use cost or should I use market value over here? So what do you think? Exactly, we will use market value. Why? Because for market value, for using market value, I told you that 6 years should have passed from the date when property is purchased, right? So over here, the property was purchased in September 2008. So that is more than 6 years, right? So it means in your expensive accommodation formula, you have to use market value instead of cost. So market value is 470, right? So 470,000 minus 75,000 into 2.5%. Now, since you are multiplying with a percentage, so that will give you answer for whole year, right? So again, this needs to be prorated. So into 10 divided by 12, right? So that is going to be 8229. Okay. All right. Now let's understand one thing. Okay. Now, if someone asks you that how much benefit did you got from this accommodation? Okay. If someone asks you that what is the total benefit received from this accommodation? So I will tell him that I have received first benefit of 18,333. This is my first benefit. And what is the second benefit? Second benefit is 8289, right? So what is the amount of total benefit? Yes, what is the amount of total benefit? Just add these two together. 18,333 plus 8229. Okay, so that is going to be 26,562. That is your total benefit received from this accommodation. Okay, now listen very carefully. Now this is 100% benefit, right? Okay, but over here you have not used the property 100% for personal use, right? In the question it was mentioned that 25% of the property is used for business purpose. So remember I told you that if there is any business use, so that will reduce your benefit. This is my benefit, right? 26562. But since there is a business use, so now this benefit will reduce. Okay, so you will minus business use, or exactly you can even take you can even directly take 75% of the benefit. That is also acceptable. Okay, but I'm deducting business use from here. So 26562 into 25%. So just minus your business use, which will be 6641. Okay. Now we don't have any other thing apart from this, right? So just net them off. So your total employment income will be 129921. Okay, that is your income. Now from this income you will minus your personal allowance. So will you receive any allowance over here? Yes, what do you think? Will you receive any allowance? No, right? So allowance will be zero, right? Because income is more than 125,000 pound, right? So it will be zero. So it means this is your taxable income. 129921. Now on this income you will apply your tax rates, right? So this is an employment income, right? So you will apply non-saving tax rates. So on the first 37,500, you will pay 20% tax. That will be 7,500. So income is 129921, and out of that we have paid tax on 37,500. So can you tell me the excess amount? Yes, excess amount will be 129921 minus 37,500. Excess will be 92421, right? Exactly. So on 92421 you will pay 40% tax, which will be 36,968. So it means your tax liability is 44468. Okay, that was the correct answer. 44468. Okay, now it is possible that employer have provided a car to the employee for personal use. Okay, so employer has given you the car for personal use. Okay. Now, if you are receiving car for personal use, so now you have to pay tax on it. Okay, but remember one thing, that car benefit will only come when employer have provided the car for personal use. Okay, so we have a formula for computing car benefit. So what is the formula? List price into CO2 emission prorated. Okay, list price into CO2 percentage. Now we have to learn how to compute this list price and CO2 percentage. Okay. Okay, now over here, let us first discuss about list price. Okay, now list price means that you will take the purchase price of car. Okay, then in the purchase price, you have to add transportation cost. Like let's say if the car is imported, so you have to add the transportation cost. Okay, because you're importing it from another country. Okay, so there can be some transportation cost as well. So in the purchase price, you will add your transportation cost. Then you can even add cost of accessories. Okay, you can even add cost of accessories. But for accessories, there is some rule. Okay, there are few rules for accessories. Now, what are the rules? Number one, the cost of accessories should relate to previous tax year. Okay, what is the first rule? That you will only take the cost of accessories which relate to previous tax year. So it means you cannot take the cost of accessories for current year. That is not allowed. Okay. Then secondly, let's say Mr. X family member is disabled. Okay, he is, let's say he is on a wheelchair. Okay, so now uh, over here what he is doing is that he has, let's say he has made some special accessories for that, for Mr. X. Okay, for his family member, because he has some sort of disability. So he has prepared a, let's say, a special chair in the car for that person. Okay, or maybe let's say you have prepared, you have put some special chair for the children. Okay, so although it is an accessory, but still you will ignore them. Okay, you will ignore them. Okay, these type of accessories will not come. Okay, they will not become a part of your list price. Okay, but apart from these two, okay, all other accessories cost will be added, but provided that it relates to previous tax year. Okay, so if you have put some special sort of accessories for a disabled person or maybe for the child, so that cannot become a part of list price. You have to ignore it. But apart from this, if you will include every sort of accessories cost, provided that it relates to previous tax year. So is it clear how to calculate this list price? Okay, we'll take transportation cost, purchase price, and accessories cost. And I have told you the rule for accessories cost, right? But you know, most probably the list price will be given in the exam. You will not be required to compute it. Okay. Okay, we will see how to calculate the CO2 emission. Just wait for 2 minutes. Okay. Now let me explain one important point over here. Okay. So basically from this, with the help of this formula, you can calculate your car benefit, right? But according to the rules, car benefit will decrease if employee is contributing some amount. Okay, car benefit will decrease if employee is contributing some amount towards the usage of car. Okay, now when it comes to contribution, so remember one thing, that we have two types of contribution. One is use contribution And what is the second one? Capital contribution. Okay, so let me explain both of them. Now let me first explain capital contribution. Okay, now capital contribution means that, let's say the car value is 20,000. Okay, the car value is 20,000, and the employee, he is contributing some amount towards the purchase of car. Okay, if he contributes some amount towards the purchase of car, so now it is considered as a capital contribution. Like, let's say the car value was 20,000, right? So out of that, the employee, he has contributed 4,000 towards the purchase of car. He contributed how much? 4,000 towards the purchase of car. Okay, so this 4,000, this is basically known as capital contribution. Okay, and because of this contribution, your benefit will decrease. Okay, but over here there is a rule. And what is the rule? That maximum you can deduct 5,000. Okay, so it means that, let's say if the employee is contributing 6,000, but what does the rule says? That maximum you can only minus 5,000 from the list price. Okay, clear? So that was capital contribution. Now what is the second one? Use contribution. Okay, use contribution means that employee is contributing some amount towards the use of a car. Okay, he is contributing some amount towards the use of a car. So first of all, you have to remember one thing, that use benefit will be deducted from car benefit amount, while capital contribution will be deducted from list price. Okay, you will minus capital contribution from list price, but this use contribution, this will be deducted from car benefit. And we know how to calculate car benefit, right? That is list price into CO2 percentage. And then from there you have to minus any use contribution. Okay, so clear? We have two type of contribution. First one is capital contribution and second one is use contribution. Okay. Okay, now let me tell you a few points for car benefit. Now, let's say the examiner is saying that employer have provided a car and a road license fees. Okay, and even he has even provided the insurance cost to the employee. So he is saying that employer have provided car, road license fees, and insurance cost. So do remember this thing, that all of these benefits given by the employer will not be considered as an extra benefit. Like, he is providing with road license fees and insurance fees, right? But they will not be considered as an extra benefit for the employee. Why? Because car benefit will be having the impact of all of these things. Okay, car benefit will be having the impact of all of these things. So it is not separately taxable. It is already a part of car benefit. Okay, so you will not take any such things in the question. Okay, you will not take the impact of a license fees. You will not take the impact of any insurance fees. Okay, because all of that is already a part of car benefit. Clear? Okay, then it is even possible that, let's say the employer have given the employee with a car, and along with the car he is also providing driver. Okay, he also providing a driver. So whatever salary the company is providing to the driver, that will be considered as a taxable benefit for employee, and you have to pay tax on it. So along with the car he is providing a driver, so obviously they will pay some salary to driver, right? Okay, to the chauffeur. So that will be now considered as a taxable benefit. and employee have to pay tax on it. Okay, clear? So as you can see, I have mentioned few points to remember over here. What is the first point? Pool cars are exempt. Now, what is pool car? Now, if let's say if the car is used by more than two person at a time, so that is known as a pool car. Yeah, if he is obviously contributing, if he is contributing some amount, then that will reduce your benefit. Like let's say the company is paying a salary of 10,000 to the driver, but let's say employee is paying 2,000. So by 2,000 your benefit will decrease. Yes, pool car means that if car is used by more than two-person at a time, so that is known as pool car. Okay, now um, you know, let's say you have given one car to an employee. So now I can easily calculate the car benefit because the car is only used by that particular employee. But let's say if I have given the car to more than two-person, then uh, the calculation of car benefit will become difficult. Okay, it will become difficult to distribute that benefit because now I don't know that how much of the benefit will belong to A or how much of the benefit will belong to B because I don't know how much what was their usage, right? What was the usage of car? So it will become a problem, right, to distribute the benefit. Okay, so that's why what they have done is they have made the pool cars exempt. They are saying that pool cars are exempt. Okay. Then what is the second one? That repair and maintenance, if paid by employer, are exempt. So even your repair and maintenance cost, that is also exempt if employer is paying it. Okay. Then cost of driver that we have already discussed, right? So that will be considered as a taxable benefit for the employee. Clear? Okay, now we have seen how to calculate car benefit, right? That was list price into CO2 percentage. Okay. So now let's see how that CO2 percentage will be computed. So for that, you will be referring this table. Okay. So it says that if the CO2 emission is 50 grams or less, then what is the relevant percentage for petrol cars? 16%. And for diesel car, it is 20%. Now this table is given in the exam. Okay. But they will only give you the percentages for petrol car. For diesel car, the percentages are not given. Okay, so percentages are different for petrol and diesel car, right? But they will only give you the percentages for petrol car, not for the diesel car. But that is also fine. What you have to do is in petrol car percentage, you will just add 4%. That will give you the percentage for diesel car, like 16 plus 4, that will be 20. Okay, the 19 plus 4, that is going to be 23. Okay, so you will just add 4% to the percentage of petrol car, and that will give you with the percentage for diesel car. Okay. Okay, now if the CO2 is between 51 till 75 grams, then the relevant percentage is 19. Okay, for petrol car, and for diesel it is 23. Then 76 till 94 it is 22%. Then till 95 grams, the percentage is 23%. Okay, so that is dot 95 grams. It is not 95 grams and above, right? It is only 95 grams. So till 95 grams, it is 23% for petrol car, and for diesel car, it is 27%. Okay, now listen very carefully. Now, if the CO2 emission of car is more than 95 grams, okay, now I'm talking about CO2 emission which is more than 95 grams. So till 95 grams, the percentages are fixed, right? Okay, till 95 grams, the percentages are fixed. But let's say the CO2 is more than 95. So now they're saying that on excess grams, you have to do a calculation. Okay, on the excess gram, you have to do a calculation. Okay, so now according to the rules, for each excess 5 grams, okay, for each excess 5 grams, 1% will be added. Okay, 1% will be added. Okay, so for each excess 5 grams, you will only add a 1%. And maximum, your percentage can grow and become 37%. Okay, maximum it can grow and become 37%. So it means the CO2 emission, it can increase by a maximum of 37%. And this 37%, this is same for petrol and diesel car. Okay, this is same for petrol and diesel car. The limit is same for both of them. Okay, like let me give you an example. Okay, but before that, just read this point with me. Okay, then we will look at the example question. It says there is a 4% surcharge for diesel car that do not meet the real driving emission 2 test standards. Okay, RDE2. Companies diesel car meeting the RDE2 standard are treated as if they were petrol cars. Okay, so now this is a new rule which has been added. Okay, now what does it says? Now it says that for the diesel car, if it does not meets RDE2 standard, okay, real driving emission 2 standard, okay, if it does not meets that standard, then only in that case you will add 4% to the petrol car. Like for petrol car, it is 16%, right? So you will add 4% to it. So that will give you with the relevant percentage for diesel car. But when will you do that? When it does not meets the standard. Okay. But if the car is meeting RDE2 standards, then it will be treated as a petrol car. Okay, because you know in UK they will examine your car. Okay, if they think that it is environmental friendly, so they will take less text from you. But if they think that it is not friendly, okay, if the CO2 emission is very high, so now they will be taking more text from you. Okay, because they want to make the environment, um, they want to make it a pollution free. Okay, clear? Okay, now please look over here. Okay, now let's say the CO2 emission is 145 grams. Okay, or let me just write it down over here. Let's say the list price of car is 50,000. Okay, and CO2 emission is 145 grams. Okay, now you have to calculate car benefit. So we know how to calculate car benefit, right? So what you have to do is you will take your list price into CO2 percentage. Okay, now assuming that this is a petrol car. Okay, assuming this is a petrol car. Okay, now we know that till 95 grams the percentages were fixed, right? So out of 145 grams, I will say that till 95 grams the percentages are fixed. Now, what was the percentage for petrol car till 95 grams? That was 23%, right? 23%. So I will take 23% over here. Okay. Now the rule says that for the excess gram, for the grams which are above 95 grams, they are saying that for each excess 5 grams, you have to add 1%. Okay, for each excess 5 grams, you will add 1%. So firstly, tell me the excess grams. Take the difference between 145 and 95. That will be 50, right? Excess grams are 50. So this will be divided with 5. So that is going to be 10%. Okay. So it means now the percentage for 145 grams will become 33%, right? 33%. So this is your relevant CO2 percentage. Okay. Now just multiply it with the list price. That will give you with the car benefit. So list price is 50,000 into 33%. So it means your car benefit will become 16,500. Okay, clear? Okay, now they have told you that maximum this percentage can be 37%. Maximum this percentage can be 37%. So it means even if your answer is coming as 38%, so you will say that this is restricted to 37%. Okay, and that is the same for both petrol car and diesel car. Clear? Okay, now next we are discussing fuel benefit. Okay, so car benefit that is connected to another benefit which is known as fuel benefit. Okay, so maybe it is possible that employer, okay, he is providing you with fuel for private journeys. Okay, yes, let's say he has provided you with a car for personal use, and along with the car, fuel is also provided, okay, for private journeys. So in that case, you have to calculate fuel benefit. Okay, you will be calculating fuel benefit. Now for fuel benefit, we have a formula. Okay, what is the formula? 24,100 into CO2 percentage. Now the CO2 percentage is the same which you have used for car benefit. Okay, which you have computed for car benefit. So the CO2 percentage will be same which you have used for your car benefit. Okay, and this 24,100, this is fixed for both petrol car and diesel car. Okay, this is fixed for both petrol car and diesel car. Okay, so now I'm repeating again. When will you calculate fuel benefit? When employer provides fuel to employee for private journeys. Okay, so normally it will come along with car benefit. Okay, so the examiner will tell you that let's say he is saying that employer have provided fuel for private journey. So it means you have to compute your fuel benefit as well. Okay. And if you are not receiving any fuel benefit from the employer, then you will not compute it. Okay. Now for fuel benefit, you have to be a little bit careful. Okay. When will you not calculate your fuel benefit? Number one, if fuel is provided for business purpose only. Okay, so if the fuel is provided for business journeys only, so you don't have to compute any fuel benefit over here, because I have given you the concept, right? I have told you that you will only compute this benefit when fuel is provided for private journeys. Okay, not business journeys. And what is the second point? That if 100% private fuel paid by the employer is reimbursed by employee. Okay, so now let's say the employer have given they have provided a fuel to the employee. Okay, they have provided fuel benefit to the employee. Okay, let's say you have received 2000. You have received an amount of 2000. Okay, so if the employer sorry, if the employee reimbursed the whole amount, okay, if he reimbursed the whole amount, so now your fuel benefit will reduce. Okay, it will reduce. Okay, but listen very carefully. Now, in case if there is a partial reimbursement, okay, in case if there is a partial reimbursement, let's say you have received 2000, but you have only paid £500 to the employer. So there's a partial reimbursement, right? So partial reimbursement will not reduce your fuel benefit. Okay, partial reimbursement will not reduce your fuel benefit. It will only reduce where there is 100% reimbursement. Okay, so if you reimburse the whole amount, then only your benefit will decrease. In fact, there will be no benefit then, right? Okay, so in this case, obviously, if you reimburse the whole amount, so you don't have to calculate any fuel benefit then, right? Now, why will I pay the tax? I will tell the taxation authorities that I have received 10,000 as a benefit and I have reimbursed the whole amount. So now, obviously, you don't have to compute any fuel benefit. Okay. Okay, now there is one more point that I want to add. Okay, now let's say the question says that employer have provided a fuel of 8,000 to the employee. Okay, he has provided a fuel of 8,000 to the employee for private journeys. So now fuel benefit will not be 8,000. Fuel benefit will not be 8,000. You have to calculate the fuel benefit using the formula, which is 24,100 into CO2 percentage. Okay, now this mistake is made a lot by the students. Okay, so avoid this mistake in exam. So if he is saying that he is providing a fuel of 8,000, so my fuel benefit is not 8,000. You have to compute it using this formula. Clear? Okay, now next look over here. Companies when benefit. Okay, now over here, let's say employer is giving a van to the employee for personal use. Okay, instead of car, he is giving you a van for personal use. Okay, so it will be considered as a van benefit. Okay. Now in van benefit, the amount is fixed, so you don't have to perform any calculation over here. So what is the amount? That is pound 3430. This is per annum. Okay, this amount is per annum. So over here you don't have to perform any calculation. Okay, over here we have an amount which is fixed at 3430 per annum. Okay, now it is also possible that along with the van, he is also providing fuel for private journey. Okay, so now over here, what you have to do is you have to pay tax on that fuel benefit. Okay, company van fuel benefit. But again over here we don't have any formula. Okay, we have it is basically fixed at 655 pound per annum. Okay, it is fixed at 655 pound per annum. Okay, so these are per annum amounts. Okay, per year amounts. So firstly you will look in the question and you have to see that for how many months the van was used in the current year, and then accordingly you will time apportion it. Okay, because this is per annum amount, right? So you have to see that for how many months the car was used for, the van was used for in the current year, and accordingly you will prorate. Like let's say if you have used the van for 10 months in the current year. So it means both your use benefit, okay, both your van benefit and fuel benefit will be prorated over 10 months. Clear? Okay, now next, can you see childcare benefit? Okay, now basically, let's say maybe it is possible that employer is having his workplace nurseries. Okay, because in UK there's a concept of working women, right? So maybe the employer he might be providing such facilities to the employees. Okay, so if there are any workplace nurseries, so that is 100% exempt. That is a benefit for employee, right? Workplace nurseries, because they can leave the child over there and they can go back to work. Okay, so that workplace nursery is 100% exempt. You don't have to pay any tax on it. But not all the employer have workplace nurseries. Because only large organization they will be having workplace nurseries. So not all the employer have workplace nurseries. So now what they do is, if they don't have workplace nurseries, so they will ask you to go to an approved child carer. Okay, they will ask you to go to an approved child carer. You can drop the child over there and you can come back to work. Okay. Now what happen is, now the employer he will reimburse you. Okay, he is saying that you can take the services from this XYZ child carer and we will reimburse you. Okay, we will reimburse you. So whatever the employer will reimburse, there is a certain limit which is exempt. Out of that, there is a certain limit which is exempt. Now let's see what are the exemptions. So it says that it is £55 per week for a basic rate taxpayer. So for basic rate taxpayer, what is the exemption limit? £55 per week. Then for high rate taxpayer, it is £28 per week. And for additional rate taxpayer, it is £25 per week. Okay, so as you can see that if the individual is a high rate taxpayer, then can you see the exemption limit is decreasing for high rate and additional rate? Okay. Okay, now if you receive more than this, okay, if you receive more than, like let's say I am a basic rate taxpayer. So if the employer pays me more than 55 pence, more than £55, so I will only pay tax on the excess amount. Okay, I will only pay tax on the excess amount. Clear? So if he is paying you £60 per week, so the exemption is still £55, right? So it means I will only pay tax on £5, okay, on the excess amount, okay, on the amount which is above 55 pence, £55. Okay. Clear? Now this authorized mileage allowance, this is already covered. Bonus is also covered. Termination payment, that is also covered. Okay, now we are discussing loan benefit. Okay, now listen very carefully. Now basically, if let's say the employee is taking loan from the employer, right, that facility is available, right, in many of the organizations, that if you want you can take the loan from the employer. Okay, so over here let's say the employee is taking the loan from the employer at either 0% interest, okay, or I'm paying interest less than the market interest rate. Okay, either you are paying 0% interest, zero interest on that loan, or you're paying interest less than market interest rate. Now the official rate of interest in UK is 2.5%. Okay, we are studying the rules for last year, not for the current year. Okay, so this is the rate for last year, 2.5%. Okay, so if you pay interest less than 2.5%, so now it will be considered as a beneficial loan, or you can also call it loan benefit. Okay, so beneficial loan means that either that loan will be interest free, I'm not paying any interest on it, and what is the second thing, that I'm paying interest less than the official interest rate, okay, less than 2.5%. So now it will be considered as a loan benefit. You have to compute your loan benefit. Okay. Okay, now for loan benefit, remember one thing, that this loan benefit will only be computed, okay, when the amount of loan is more than 10,000. Okay, when will you calculate this loan benefit? When amount of loan is more than 10,000 pound. Okay, so it means that if in the current year the employee has taken a loan from the employer which is less than 10,000, so loan benefit will not be computed. Okay, that is mentioned in the notes as well, that if the amount of loan is less than 10,000, it will not be it will be treated as a small loan and is exempt. Okay, so if you have taken a loan which is less than 10,000 pound, so now you don't have to compute any loan benefit. Now it will be exempt for you. Okay, but let's say if you have taken a loan which is more than 10,000 pound. Okay, so now loan benefit will be computed. Let's say you have taken a loan of 12,000 pound. So now you will be calculating the loan benefit on the whole amount. Okay, I'm not saying that you have to compute loan benefit on excess amount. I'm saying that you have to compute loan benefit on the whole amount. Okay, not on the excess. I'm not saying that you have to compute it on amount above 10,000. No, you have to compute it on the entire amount. Okay. Okay, so we have few methods for computing loan benefit. Okay, now look over here. Now let's look at those methods. We have two methods. One is simple method, also known as average method, and the second one is precise method, also known as strict accurate method. Okay, so first one is precise method and second one is average method. Okay, so you will be computing loan benefit using both the methods. Okay, you have to compulsory compute it using both the methods. Okay, then in comparison you will take the lower of. Okay, like I will be computing loan benefit using average method first, then I will compute loan benefit using precise method. So you will have two amounts, right? Two amounts. So now you will compare both the amounts and in comparison you will take the lower of. So that lower of will be taxable. Okay, so you cannot decide in between precise method and average method. You have to calculate your loan benefit using both the methods. Okay, and then for computing your loan benefit, what you have to do is you will compare both the methods and in comparison you will take lower of amount. So that lower of amount will be taxable. Okay, now let's see how to use this average method. So for average method we have a formula, that is opening loan plus closing loan divided by 2 into 2.5%. Okay, opening loan plus closing loan divided by 2 into 2.5%. Yes, you have to see that if loan benefit was available throughout the year, then you will not prorate it. But if let's say if it was provided during the year, then you have to prorate the percentage. Because whenever you're multiplying with a percentage, that will give you answer for the whole year. So you have to see, okay, you have to look in the question whether this needs to be prorated or not. Okay. Then what is the next method? precise method. Okay, now for precise method, just leave this formula. I'm telling you how to do the calculation for precise method. For average method, it is very simple, right? Opening plus closing divided by 2 into 2.5%. Now for the precise method, I'm telling you how to perform the calculation. Okay. Let's look at a question quickly. Please look over here. Okay. So on 6th of April 19, let's say there's this individual, Mr. X. He took a loan of 20,000. Okay. Then on 1st of September 19, again he took a loan of 30,000. Okay, then on 1st of December 19, he took a loan of 10,000. And then on 1st of Feb 20, he took a loan of 20,000. Okay, so these are the transactions during the year. Okay, now the requirement says calculate the loan benefit under the following two cases. What is case one? That 0% interest is paid. And what is the second case? That 1.75% interest is paid. Now you will deal with both the cases separately. Okay, firstly, we are dealing with case one where 0% interest is paid. Okay. Okay, now please remember one thing, that we will do the calculation on saving. Okay, we will do the calculation on saving. Now I told you that the official rate of interest is 2.5%, right? That's how much? 2.5%. Now in case one, I'm not paying any interest. I'm not paying any interest. So it means the whole interest of 2.5% will be my saving, right? Because what is the official rate? 2.5%. But in case one, I'm not paying any interest. So it means that entire 2.5% is my saving. Okay, so you will do your calculation on saving. Okay, on which in case one will be 2.5%. Okay, so remember this thing, that we will be doing our calculation on saving. Okay, and I told you that loan benefit will be computed using both the methods. That is average method and precise method. Okay, so let's see case one. Let us first deal with precise method. Okay, now please look very carefully. Okay, now in case one, I will save 2.5% interest, right? Now, is that clear to each one of you? Yes, please tell me, is it clear? Okay. Now, firstly, on 6th of April 19, he took a loan of 20,000, right? 20,000. So 20,000 multiplied by the percentage of saving, which is 2.5%. Okay. Okay, now listen carefully. Now this 20,000 loan, this is not the total amount of loan for the whole year, right? This 20,000, this is not the total amount of loan for the whole year. Because after this, there is one more transaction. Right? After this, there is one more transaction, right? So you're now in the next transaction, that is on 1st of September 19. So if I ask you that for how many months you have taken this loan of 20,000, so you will count the months, right? You will count the months from April till uh, September, right? In fact, till August. So can you tell me how many months will that be? Okay, from April till August. Yes, that is going to be 5 months, right? April, May, June, July, and August. 5 months. Okay, so I'm prorating this over 5 months, right? So into 5 divided by 12. So that is going to be 208. Okay. Okay, so till till the month of August, we had a loan of 20,000, right? Then on 1st of September 19, we are taking uh, some more loan of 30,000, right? I'm taking more loan of 30,000. So now it means that my total loan will become 50,000, right? 20 plus 30, 50,000. So I'm writing 50,000 over here, multiplied by the percentage of saving. Okay, now listen carefully. Now, do you have this 50,000 loan for the entire tax year? No, right? Because even after this, there is one more transaction, right? Now, the next transaction that took place on 1st of December 19. So it means you will be counting your months from September till November, right? From September till November. So that will be 2 months, right? So into 2 divided by 12. Sorry, that will be 3 months. Okay, that is the month of September, October, and November. 3 months. Okay, so that will be 313. So is it clear? Okay. Okay, so now till 1st of September, we have a loan of 50,000. Okay. Now, can you see again on 1st of December, we are taking an additional loan of 10,000. So it means now my total loan will become 60,000, right? Because till September it was 50,000. Now we are taking an additional loan of 10,000. So my total loan will become 60,000. Okay, so 60,000 into 2.5 percentage. But again, this is not for the whole year, right? Because after this, there is one more transaction. So now the next transaction that took place on 1st of Feb 20. So it means you will count your months from December till January. So the month of December and the month of February. The month of January. Okay, December and January, that will be 2 months, right? So into 2 by 12, that will be 250. Okay. Okay, now the last transaction that took place on 1st of Feb 20. So on 1st of Feb 20, we again took a loan of 20,000. Okay, so till December, my total loan amount was 60,000, right? And now in February, I have taken an additional loan of 20,000. So it means my total loan will become 80,000, right? 60 plus 20, 80,000. So 80,000 into 2.5%. Okay, now listen very carefully. Now see, after this, there is no more transaction, right? We don't have any further transaction. So now what you have to do is, now you will do your calculation till the end of tax year. Okay, now you will go till end of tax year. So the last transaction that took place on 1st of Feb, right? 1st of Feb 20. So now what you have to do is, you will go till the end of tax year. So the tax year will end on 5th of April 20, right? So count your months from February till, in fact, you will count your months till March, right? So we will count a month of February and March. That will be 2 months. So into 2 divided by 12. This is going to be 333. Okay. So it means your total benefit from this method will be 1104. Okay. So that was your precise method. I hope it is clear. Yes. Does any one of you have any problem? That was simple maths and nothing. Okay. Now let's look at the second method with it, which is average method. So how will you calculate? You will take opening loan plus closing loan divided by 2 into percentage saved. Okay. So opening loan. So initially we took a loan of 20,000, right? 20,000. That was your opening loan, 20,000. Okay. Now at the by the end of the year, okay, your closing loan, that was how much? 80,000, right? Okay, because till the end of the year, till that date, we have taken a loan of total loan of 80,000. So that is your closing loan. So plus 80,000 divided by 2 into percentage saved. So we are saving 2.5% right? That will be 1250. Now what you have to do is you will compare this figure of 1250 with 1104, right? You have to compare the amounts from both the methods, right? And in comparison, you will take lower of amount. So which one is the lower of? This one, right? 1104. So this will be taxable. So this 1104 will be taxable. Okay. This will be considered as your loan benefit 1104. Now it's not necessary that it will be equal to 12. Okay, it depends upon the question. Okay, because if you are taking the loan, let's say during the mid of the tax year, then obviously it cannot be equal to 12 months, right? If I talk about case 2, see case 2, first of all, you have to compute the percentage of saving. So in case 2, we are paying 1.75% interest, right? And what is the official interest rate? 2.5%. So it means we are saving 0.75%, right? That is your saving. So you have to do your calculation on this saving of 0.75%. So each and everything that will remain the same except for the percentage. You will just change the percentage over here, 0.75%, 0.75. Okay, so that will remain, the each and everything will remain the same except for the percentages and obviously the amount. Okay, so the first one will be 20,000 into 0.75 into 5 by 12. That will be 63. Then this one is 94, 75, and this is 100, right? So total benefit will be 332. Okay. Okay, now when it comes to your average method, so opening and closing loan amount will remain the same, right? You will just change the percentage of interest saved. So now that is 0.75%. So that is going to be 375, right? So now what you have to do is you will compare the answer from both the methods, and in comparison you will take lower of, which is 332. So that is your loan benefit. You have to pay tax on it. Okay. Okay, now please listen very carefully. Okay, now let's say the employee is taking an interest-free loan from the company. Okay, he is taking an interest-free loan from the company, and from that loan, he purchased an asset. Okay, from that loan, he purchased an asset. Now that asset is 100% used in the employment. Okay, let's say from that loan, he purchased a laptop, and that laptop is used 100% in his job, in his employment. So now in this case, there will be no calculation of beneficial loan. Why? Because you are using that loan for qualifying purpose, right? So now it is not for personal use. You're not taking the loan for personal use, right? In fact, that is related to job. Okay, you took a loan, and from that loan you have purchased an asset, and that asset is used in your job. Okay, like let's say you have purchased a laptop and you are using that laptop in your job. So it means it is used for the purpose of business, right? So there is no private use of that asset, of that loan. Okay, so now loan benefit will not be computed. Clear? Okay, now let us first discuss just medical benefit, and then we will discuss use benefit, which is our last benefit. Okay. Okay. So medical benefit, it says an annual exemption of £500 per employee have been introduced where an employer pays for medical treatment. The exemption applies where medical treatment is provided to an employee to assist them to return to home, to assist them to return to work after a period of absence due to ill health or injury. Okay, so if you are provided with any medical related benefit, so you will receive an exemption of £500. Okay, so that is for medical benefit. Now you can even receive a medical insurance, right? So for medical insurance, is it says that medical insurance for employees in UK is taxable. So if the employer is providing with any medical insurance to the employee who is based in UK, so then it is taxable. Okay, but medical insurance for employees in overseas is exempt. Okay, so that was your medical benefit area. Now please look over use benefit. Okay, now listen very carefully. Now let's say the employer have given the house to the employee for personal use. So in that case, you will be computing accommodation benefit. Okay. And when he was giving you with a car for personal use, so we were calculating car benefit. Okay. And when he was providing fuel for private journeys, so we were computing fuel benefit. Now, apart from these benefits, okay, that is car, home, and fuel, if he provides you with any other fixed asset for personal use, then you will compute use benefit. Okay, apart from car and house, if he provides you with any other fixed asset, so on that fixed asset, you have to compute use benefit. You will be computing use benefit. Okay. But over here, just remember one thing, that if you are receiving a mobile phone, okay, we are receiving a mobile phone, so the first mobile phone is exempt. You don't have to pay any tax on it. Okay, but let's say if the employee receives two mobile phone, so for tax planning, what you will do is you will actually make the phone, you will make the expensive phone exempt. right? I'm receiving two mobile phones, right? So what I will do is I will make the expensive phone exempt. Okay, that is your tax planning, because only first mobile phone is exempt. Okay, clear? Okay, so if you are receiving any other fixed asset for personal use, so you will compute use benefit. Okay, now how that use benefit will be computed? So for that we have a formula, that is cost into 20%. So again, since you are multiplying with a percentage, so that will give you answer for 12 months. Okay, so you have to see that for how many months that asset was available during the tax year, and accordingly you will prorate. Okay. Okay, now this use benefit, this is connected with purchase benefit. Okay, this is also connected with purchase benefit. Okay, now this is because when the employer gives you an asset for personal use, so after some time he will replace that asset, right? And at the time of replacement, he will give you an option that either you can return that asset back to the employer, or what you can do is you can purchase that asset from the employer at less than the market value. Like I can give you a very practical example. Like it happened many a times that whatever laptop you're using in your job, so maybe after 2 years or 3 years, when they will replace that laptop, so they will put two options in front of you. They will say that either return that laptop back to us, or what you can do is you can purchase that laptop from us at less than the market price. That happens a lot, right? Many of you must have seen this thing, even in the practical life. Okay, so now even your employer, he is also aware that if the employee gives the asset back to him, so now they have to auction that asset and sell it. So that can be time consuming, right? So they put the second option in front of you, that if you want, you can purchase that asset less in the market value. So firstly, they have given that asset for use, right? Now they're giving you an option to purchase that asset at less in the market value. Okay, so now over here in this case, you will be computing one more benefit, that is purchase benefit. So how will you calculate that purchase benefit? Please look over here. So what you have to do is, for purchase benefit, we have two methods. One is market value method, and second one is net book value method. Okay, net book value method. Okay, so for market value method, what you have to do is you will take the market value of asset, which will be given in the question. Okay, so from this you have to minus price paid. Okay, you will minus price paid by the employee. Again, that will be given in the question. Okay, so that will give you with a benefit. Okay, so firstly you will calculate it using market value method. Now secondly, you will calculate it using net book value method. Now we know how to calculate net book value, right? That is cost minus accumulated depreciation, right? Cost minus, you will take your cost, you will less your accumulated depreciation, right? But can I say that the formula which we were using for computing use benefit, that is actually your straight line formula, straight line method formula, right? In use benefit, what you were doing is you will basically take your cost into 20%. So can I say that this is in a way your straight line method, right? Straight line formula. Okay, only the name is different, right? In text, we have termed it as use benefit, but in actually, this is your straight line method. So if I want to compute the net book value, so what I can do is I can take the cost minus accumulated use benefit. that will give you with your net book value. Okay, net book value. Now from this you have to minus the price which is paid by the employee. So that will give you with the benefit. Okay. Now you will compare both the methods. You will compare answer from both the methods, and in comparison, higher of will be taxable. Higher of will be taxable. Clear? Okay, now please look over here. It says that on 6th of April 18, Mr. A received a home theater system at a price of 40,000. So remember I told you that apart from car, accommodation and first mobile phone, if you are receiving any other fixed asset, so you will be calculating your use benefit. Okay. So we are receiving a home theater system, right? So you will be computing your use benefit. Okay, then it says on 5th of April 17, Mr. A, in fact, change this date, just make this date as 5th of April 19, okay? 5th of April 19. Okay, so Mr. A purchased that system at a price of 18,000 when its market value was 21,000. So now he is purchasing that system, right? So it means along with the use benefit, you have to compute purchase benefit as well. Okay. So you have to calculate the total benefit for 1920.
Mm.
Okay, now please look over here. Okay, now what you have to do is, see, he received the asset on 6th of April 18, right? 6th of April 18. And then on 5th of April 19, okay, just change this date, on 5th of April 19, he purchased the asset. So can I say that for 1 year, he have used this asset, right? For 1 year. Okay. So if I compute use benefit, so that is cost, which is 40,000 into 20%, right? And we have used this asset for the entire 1 year. So you will not prorate this percentage. This will be 8,000. Okay. Now, since you have purchased this asset on 5th of April 19, so you will also compute purchase benefit. Right? So for purchase benefit, you will be computing it using two methods, right? Market value method and net book value method. So for market value method, what you have to do is you will take the market value. So what is the market value of asset? 21,000, right? Minus price paid, which was, so Mr. A, he purchased a theater for 18,000, right? So price paid is 18,000. So it means the benefit will be of 3,000. Okay, now you will be computing your net book value. So for that you will take the cost. So cost of asset is 40,000 less accumulated use benefit, right? Okay. So you have only used this asset for 1 year, right? That is from 6th of April 18 till 5th of April 19. That will be 1 year. So it means you will only minus your use benefit for 1 year, which is 8,000, right? So net book value will be 32,000, right? Now from this you have to minus the price paid, which is 18,000. Okay, so benefit will be 14,000, right? Okay, now what you have to do is you will compare the benefit from both the methods, and in comparison you will take higher off. Higher off will be taxable, right? So that means this 14,000 will be taxable. You have to pay tax on this 14,000. Okay, now we have studied not job related accommodation, right? So in not job related accommodation, we have already seen the tax implication for that, right? Okay, now for not job relating accommodation, if let's say if the employer is bearing the cost of chef, so it is a taxable benefit over there. Okay, and similarly, let's say if he is bearing the cost of bills like your water bills or electricity bills, so again that is a taxable benefit over there. Okay, I'm talking about not job related accommodation. So if he is providing against the cost of chef, or if he is providing any electricity bills, water bill, etc., so that will be taxable benefit over there. Okay, now if I talk about job related accommodation, so firstly, for job related accommodation, I have already told you that in order to perform your job, you have to live in the accommodation, right? Like I have given an example of security guards. Like without that, they can, without living in the accommodation, they can't uh, fulfill the job, right? Okay. Okay, now please look over here. See, for not job related, we have already seen that a basic benefit will be computed, right? Okay, basic benefit means that you will be, your annual rateable value will be taxable over there. So that is basically termed as basic benefit. And for additional benefit, remember for expensive accommodation, there was a condition. So if I fulfill that condition, even that was also taxable over here. But in job related, both of these are not taxable. Both of these are not taxable. Because now how can you tax from someone who is living in the property for the purpose of job? Right? How can you ask him to pay tax on the rent amount? Because now he will say that if the employer is paying any rent for this property, so that rent, that accommodation is not actually a benefit for me, right? So how can you take tax from me on that benefit, right? On that rent, that is not a benefit for me, right? I have to live in this accommodation for the purpose of this job. So even if the employer is paying any rent against this accommodation, so that is not a benefit for me. So I will not pay any tax on it, right? So in job related, you will not pay tax on any basic benefit, and neither you will pay any tax on the additional benefit. Okay. But if I talk about ancillary benefit, like if you are paying, if the employer is paying any house bills or if he is paying any, if he is bearing the cost of chef. So that is 100% taxable in non-job related. But if I talk about job related, so for job related, it says that lower of will be taxable. That is actual ancillary benefit and 10% of employment income. Okay, so only the lower of will be taxable. Okay, then look at the conditions for job related accommodation. Like it says, if accommodation is necessary for job, example, army. If accommodation is for better performance of job, example, caretaker. Or if the accommodation is for security purposes, example, chief minister house. Okay, so if you have to give security of chief minister house, then obviously you have to live over there, right? Okay, so that was all we have from job related accommodation. So we have covered our entire topic of employment benefit. Now for the exam benefits, there is a list in the notes. So you guys can read that on your own. That is very simple. I don't think that requires any explanation. So you guys can even do that on your own. Okay, you can read that on your own. And if you have any problem, then you can discuss with me. Okay. Okay, like it is there on page number 15. So these are very simple. You can go through them. And if you have any problem, then you can discuss with me. Okay. So today we have